Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com. Make sure to subscribe to this podcast and share it with a friend. This is episode 49, and today we are going to talk about billing in the Big Four. It's one of my favorite topics. Well, it's not really my favorite topic, but it's a topic that really gets me riled up and makes me want to go on a rant. And that's what I wanted to speak about today. The format of this podcast is going to be more of me going on a rant of how difficult billing is in the Big Four accounting firms. Okay, let's get right down to it. Billing in the Big Four is hard for a number of reasons. And the first reason it's hard is because of the bureaucracy at the Big Four. We spoke about this on a previous podcast, and I'll include that link in the show notes to this podcast. And it's this bureaucracy that creates the system that makes everything impossible to do. You can't get billing right. You can't charge your time right. You have to forecast your time. Don't go over there because there's red tape. You might break it. Also, there's red tape over here. Watch out. So everything has to be made difficult because of these layers of rules that don't matter, that you put there before, that people just blindly follow. And I probably can't speak to it as well as others. And one example I can give of that is the Masters of Scale podcast with Reid Hoffman. And the episode I want you guys to listen to, if you have time, is the one where he was interviewing Reed Hastings, who is the founder and CEO of Netflix. And the whole show was about culture and how to establish a great culture. And I'm definitely in favor of that. And I think all the Big Four accounting firms should definitely listen to that podcast and adopt it, because culture at the Big Four is really terrible as far as bureaucracy and innovative thinking. And the story on that podcast that I specifically want to talk about is where Reed Hastings, before he founded Netflix, he had another startup company that was helping debugging software and coding for software. And this was, it was a startup initially, so it didn't have great culture. And he wasn't focused on culture. He was focused on being a programmer and making his startup successful. But once that startup started scaling, started getting bigger, he had to focus more on culture, but he didn't necessarily do that. And what happened is they grew, is they established more and more rules. But eventually what ended up happening is the company got so big, they needed to design new rules for a company of that size. And what they ended up hiring by default was a bunch of people that could follow those rules. So all they had is a bunch of rule followers, and they didn't have anybody that was innovative and could help the company grow. And he didn't like that, and he wished that was something that he had changed, and he had to learn that the hard way. Because if you don't look at your culture early and often, then all you're going to get is this rule followers, or you're going to get whatever you hire. And if you're not conscious of it, then that's going to become your culture. And that's my point with this, where I'm going with this, the Big Four, is that the Big Four by nature are highly regulated entities. And so they establish all these layers of rules because of regulations, of lawsuits that have been filed against them, of regulatory fines and penalties that have been assessed to them. And it's just layer after layer after layer of rules. And they don't stay conscious of higher principles and higher cultural values, that if they follow those cultural values, they could avoid a lot of further regulation. It's because they don't have culture and integrity that they run into all these regulatory problems, and then they just end up hiring a bunch of rule followers that make everything impossible. And that was what they discussed in that Masters of Scale podcast, and it was really great. And that's sort of where I wanted to start with this billing conversation, is because of this culture of bureaucracy and rules for no reason that makes billing ridiculous. Okay, another reason that billing is impossible at the Big Four, and you'll see it if you're going to work at the Big Four. In audit, you might see it a little bit less, just because audits are a lot larger engagements and you don't have to bill small bills. Whereas in tax, you see it a little bit more often because there's smaller engagements, and in advisory as well, you'll see a lot more billing problems. And another reason billing is really difficult at the Big Four is because the rates per hour are so artificially high. The rates per hour are set by region. So in some regions, they'll be higher than others. But for example, in New York, the rates per hour can vary for partner from $700 an hour to $1,200 an hour, depending on which firm you work. And some firms charge an admin surcharge because they're so bad at billing that they make their staff put an additional admin surcharge, which is essentially a buffer on every single code, because they know that they don't think about all the admin it's going to take to perform on that engagement, which is ridiculous if you think about it. To have an admin surcharge and to send that on to the client is absolutely ridiculous. And these artificial rates, do you think they actually recover that? Of course not. $1,200 an hour? Are you kidding me? That's insane. these are where the games begin, because the rate per hour is $1,200. And when you set up codes, which is what it's called when you set up the billing process for a client in the Big Four, you have to reduce the rate per hour that hits that code so that you don't have a loss when you ultimately close the code. And the difference between the amount you bill the client or recover cash versus the amount of hours charged to the code is revenue or loss. And I'm sure that sounded confusing, and I'm sure I'm not explaining every single variable because I hate clouding my mind with this garbage. But as you can tell, there are many different variables to play around with, and trust me, they all get played around with in the billing process. And another variable is write-offs. So like I said before, the amount of time charged to a code versus the amount you recover from the client is your gain or loss. And as I also said, you have to recognize that gain or loss when you close out the code. And so to have less of a loss when you close out the code, people will do small write-offs. And each firm has different policies. Like if you have a loss above $25,000, the lead partner in your region will get a notification. So if you do small write-offs, that partner doesn't get notified. And that's what people end up doing, so that when you close out the code, it's an overall small write-off because you've been amortizing write-offs throughout the time that you've had the code open. Now, if that sounds kind of shady and weird, then you're right, it is. But it's all fake accounting anyway, so it doesn't really impact anybody. And it's this hours in the code times the rate per hour that is really the revenue, the top line revenue. But what ultimately you end up collecting is your ultimate revenue. And another variable that gets played with are the rates on the rates per hour that is charged to a client. For example, like I said before, you have to set up the code at a certain rate when you set it up. And this is how much you're going to be charging the client per person. For example, the partner I said earlier could be anywhere from $700 to $1,200. Well, you go to the client, you say, our rates per hour are $700 or $1,200. They say, oh, that's insane. And then you say, okay, we'll charge you 60% of that because we're making an investment in you. And this happens all the time where Big Four says we're willing to make an investment. We need something on the back end. And ultimately, nothing ever comes to fruition. But it's essentially the way that everybody justifies lowering the rate. It's sort of beating around the bush and saying, you guys don't really deliver value, so I want to pay half of your rate because you might deliver half of what you think you are capable of delivering. And then the Big Four says, okay, we'll do that, but you owe us later. And then they both just sit there and be like, okay, yeah, that sounds good. And then they both walk away. And so this rate per hour that hits your code gets played around with a lot. And the client doesn't necessarily see this either. So people mess around with this a lot too. And this is where people get creative, and it's just a waste of time. Because if you're messing around in your own bill and wondering where fake revenue, like, well, if I write it's 55%, but let's see if we can move it down to 53%. And let's see if we can ultimately come out with a gain on that. But the gain is actually just in the code. It's not the amount of money we are going to collect from the client is not going to change. And I say that because a lot of engagements as a Big Four do are fixed fee, but the amount, like I said earlier, the amount you're going to collect from the client versus the amount of hours that it took your people to complete that engagement is your revenue. So it's the amount of hours times the rate. And if you mess around with that, you can make yourself look really good or you can make yourself look really bad. When I feel like it should be more of a focus on delivering client value efficiently. And there's different ways to measure that than mathematical magic in internal systems, just so senior people that look at old metrics don't get mad. And this might be a lot of information and might be sort of confusing, but my overall point is that there's too much time spent on internal metrics, and a lot more time gets wasted on analyzing internal metrics that don't really mean anything than is focused on delivering client value so that you can recover higher rates from clients. They will pay you that 100% of $1,200 versus paying you 30% of that $1,200 because you don't offer any value because you're too focused on closing out your code at an internal gain. And another thing that people do is another game they play is issuing invoices and then canceling it to meet billing goals because you've had your staff charge the code and we recognize top line revenue. Well, we realize people are playing that game and getting smart about that. So we need you to issue invoices by a certain day. And so people began that game too, where it's, okay, we issued our invoice, but now that the invoice period was closed, which was the 15th or the last day of the month, let's cancel that bill and then actually issue a real bill. And so this is where I think it gets really gray and black area as far as integrity and accounting and values, because if you're issuing invoices knowing you're going to cancel them, that's just not right. Again, this is another focus on internal systems and to satisfy C-suite people in the Big Four who open up their iPads and they want to see their billing metrics with green bars, and they don't want to see red bars or whatever their dashboards look like and flash red. That's why it's, and all I'm saying this for is just because once you get into the Big Four, you'll see what I'm saying with the billing process. It's just overly complicated for no reason. If instead the focus was on external and delivering client value, then you would see the billing process ease. Additionally, if the Big Four stopped artificially raising their rates per hour, the billing process would also be easier. But they raise the rates per hour every year to make the clients feel worse. They're saying, oh, our rates are going up because we got to pay people a certain amount of money. And if you don't do that, we're not going to be able to pay our people. We can't be profitable. When in actuality, they're not recovering that. They just want to sort of get their clients more comfortable with paying a higher rate, even though they're delivering the same amount of value. But they're not focusing on the client. They're focusing on these internal systems and this red tape and this culture of following old systems because they've been there forever. You know, we got sued this one time, or this person didn't do this, so that's why we have this. So go ahead and do it this way. Versus creatively thinking of how to make the billing process easier, not only for the staff people that work in the Big Four, but for the clients and everybody involved. And the last thing I want to talk about is many people in the Big Four are cowards, and they're afraid to ask their client for more money or an additional engagement letter with more fees. They'd rather waste people's times internally than speaking to their client about engagement economics. And in conclusion, Big Four billing is just another piece of red tape in the process that you have to look forward to if you want to work at the Big Four. And if you already work at the Big Four, I'm sure you've encountered this and you know what I'm talking about. That's all we have for today. Make sure to visit our website, big4accountingfirms.com. Also, make sure to subscribe to this podcast and share it with a friend. Thanks for listening.